Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, May 6th, the day after Palantir's Q1 2025 earnings. And we've got a lot to discuss. We've got a lot to discuss in the world of Palantir. We will be getting into all those earnings. That'll be our first topic of the day. Stock down about 8% in the pre-markets. So stock price not necessarily reflecting the strength of the quarter, but also potentially the stock price was a bit aggressive going into the quarter. So we'll be talking about earnings, going deeper into that. We do have AMD earnings as well today. That's going to be after the bell on the close. So we do have a bunch of earnings later today that we will be discussing. We've already had a ton of earnings so far in the pre-markets, including companies like DoorDash, Datadog, Ferrari, Lemonade, and Celsius. So we got a bunch of companies that we'll be looking at as well. Outside of Palantir that we have had basically report in the past hour. And then after the bell today, SMCI and AMD, those are going to be the big ones that I know everyone's looking at, and we'll be talking about them. But our first topic of the day is indeed Palantir, and we're going to get into these earnings, dissect them. I've spent the past 24 hours thinking about these earnings, looking through all the numbers, and so I've got some thoughts, and I'm curious to see everyone else's thoughts as well on this quarter today. Thank you, everybody, for being here. I'm sorry if my voice is still a little raspy. I was, believe it or not, up till 2 a.m. yet last night coughing. Like, it's getting kind of bad at this point, and I'm thinking, like, I need to take real medicine because the lemon tea and being the hall monitor is not working right now. So it's a bit better right now. It gets good in the morning, and then throughout the day, it starts getting worse. So if there is a little bit of raspiness or there's a little bit too much coughing, I'm sorry for that. I do think it'll get resolved soon, but it last night was actually bad. Like, it was like painfully up till 2 a.m. just coughing. So I think it'll hopefully start to get better. But if it doesn't, I actually got to take some real medicine because, like, I kind of do this for a living. I kind of talk. And I've never had a situation in the past 5 years of doing YouTube where it's like you can't talk. And this all started, if you're wondering, last week. I think we did like a 7-hour stream because there were so many closes. And like by the end of that stream, I woke up the next morning and I couldn't talk. So hopefully this is resolved. And yeah, I think I'm just going to get some cough syrup, and then put on some Future, mix some Sprite, and then like really make a night out of it. But outside of that, I think we gotta get this resolved. All right, Palantir earnings. Let's get into it. So, look, it was an incredible quarter. It was an absolutely incredible quarter. There was no other way to deny it. $883 million in revenue, up 39% year over year. $628 million in U.S. revenues, up 55% year over year. $373 million U.S. government revenues, up 45% year over year. The U.S. business is absolutely growing at a pace that is pretty unprecedented. $2.23 billion in remaining deal value. That's up 127% year over year. 769 customers is up 40%, basically 39% year over year. The interesting thing about this is the company is doing basically $900 million in revenue with less than 800 customers. I mean, it's pretty damn incredible. And we're going to talk about some of the customer testimonials we got yesterday that also, even I was just like, holy crap. Like, they are the real deal in the context of the AI software offerings. We'll talk about the reaction with the stock, but the numbers themselves, incredible. $5.4 billion in cash, no debt. Last quarter, that was $5.2 billion. And now they have 139 deals that they closed of at least $1 million. It was an incredible quarter. It truly was an incredible quarter. So the elephant in the room right here is, wait a second, why is this stock down 8%? And I don't think it's that much of an elephant in the room. I think it's just something that's kind of obvious at this point, right? So what was the idea, or what was sort of the framework I had going into Palantir earnings yesterday, and why did I buy 100 shares? I bought 100 shares, quite frankly, as an earnings gamble. Bought 100 shares of Google, bought 100 shares of Amazon. This is not my majority of my position. I have thousands of shares. The 100 shares at 125 is not going to kill my position. It was just like, hey, if they show crazy top line revenue growth, I think the stock would have the ability to get momentum to go even higher, even though I know it's trading at an aggressive valuation, that obviously the valuation can take a breather. Now, unfortunately, they showed crazy top line revenue growth, but it wasn't crazy enough. Before Palantir actually reported earnings, Amir, Matt, and I, we were both covering earnings, all three of us covering earnings on the stream yesterday. We actually thought they were going to get to 45%. Like, the closer we got to earnings, the more we felt, all right, they're not just going to have a beat. They're going to have a pretty dramatic beat. And they had a beat, but it was a modest beat. It was a beat by about $20 million, which is good. It's not horrible. But when you're trading at a $300 billion market cap, you can't only beat by 20 million, right? You've got to beat by 50, 60, 70 million, if not more than that. And they just didn't have those numbers. That's okay. And that is why the stock is down 8% right here. I would say that, quite frankly, being objective, the stock should be down a lot more than just 8% off of only a $20 million revenue beat and a 0% EPS beat, aka they came in line with EPS at 13 cents. So I am very curious. This is one of the most curious market opens I've had in a while to see how does this stock react? Because we all know that it's expensive in terms of its valuation. Do people actually buy the dip down 8% because they say, hey, that quarter was still phenomenal and we don't care? Or does this thing actually have the bottom fall out and people say, you know what? 113, 100 is a little bit too much. It's going back to 90. I'm going to take my profits. I'm going to get out of this. And we'll see kind of where it settles in after the brunt of the selling. But the fact that it's actually holding up 8% down, in my opinion, based on the market cap it's trading at versus the numbers they put up, which again, were phenomenal numbers. They just weren't numbers that were strong enough to justify its current multiple here, which is why you're not seeing the stock gap up 8% after earnings. And it kind of did. I mean, it went up like 4%. We hit 130 and then it wasn't able to hold that momentum. That's kind of how I'm thinking of this quarter in and of itself. So I thought it was an incredible quarter. And I think I talked to a bunch of different bulls yesterday. I called them up, got a bunch of different opinions from people. Everyone said pretty much the same thing to me, including Steve. And I think he'll be on in the market close today. He might be able to come onto the market open. I'll see if he can get on the show. But if not, he'll definitely be on the market close. And his argument was like, dude, this was a quarter that even he was just like, what is going on? It is incredible. He just wrote a new article about it. I'll link it right here in the chat. And he said, I thought my article was going to have to be mean, but my article is really nice. I just don't like where the stock is in terms of its valuation. But the numbers themselves were absolutely exceptional. To give you a sense of how incredible this quarter was as well, this is what AIG said, which is a large insurance company around Palantir. Palantir put this in their slide deck. They said, AIG expects their adoption of an AI-powered underwriting solution leveraging AIP, Palantir's core AI offering, to double its 5-year revenue CAGR, compounded annual growth rate, from 10% to 20%. I mean, this is insane, dude. This is absolutely insane. The fact that one of the largest insurance companies in the world, a publicly traded company, says, hey, we believe that leveraging AIP and having Palantir be the operating system for the overall company is going to double our revenues over the next 5 years. This, to me, is why we're seeing the massive beat that we're seeing in terms of top line revenue growth of 39% year over year. I just wish they had fought for that extra 1%. And sometimes you can, sometimes you can't. But if we had that 40% number, it would be, very exciting just for the street to be like, all right, they're growing 40%, but they couldn't get it this time. And I think if they did get 40%, I don't know what would happen to the stock, but psychologically that 40% number would be very important, but they got 39. So next quarter, it looks like they're gunning for 40%. I mean, here are their revenue expectations for Q2. We expect 934 million to 938 million. The street was expecting them to do something like 915 million. They're probably going to beat this and come in at closer to 950. So I think by Q3, minimum Q4, but maybe by Q3, we are going to start having billion-dollar quarters on Palantir. Revenue for the full year, the street was expecting 3.75. They raised it to 3.9, which means, realistically, they're probably going to get another 100 million by Q4, and we're going to have a 4 billion quarter. Remember, Karp did say in 2022 explicitly that he was trying to get the company to get to 4.5 billion in revenue by 2025, which would compound at 30% over the past 3 years. They would have to have a $500 million beat on their fiscal year guidance. Maybe that happens, maybe it doesn't. But the point is they are getting awfully close to the expectations that they set for the company a couple of years ago. And a couple of years ago, when they were growing at 13%, it seemed insane to imagine that they would be able to get to about 4 billion in revenue. But that's what they're doing. And it was also their 10th quarter of GAAP profitability. So again, I think the takeaway here is that if you are an actual long-term bull and you didn't get into the stock yesterday or when it was at 105 and you wanted it to go to 150, you are incredibly impressed by this quarter. You know that the stock is trading at an aggressive multiple. You're probably grateful that the stock is here, but you also know objectively, like, hey, maybe the stock could go back down to 70, 80 bucks and you would still be pretty happy given you're maybe up 3, 4, 5x even from those levels. And so from that perspective, there was nothing in this quarter for actual longs that have been here for even 6, 7 months to be upset about this quarter. And I'm trying to find the red flag. I really can't find it. If anyone has any arguments for why, this, Amit, you're not looking at this is a little bit concerning, yada, yada. But everything I'm looking at, especially operating margins. This was one of the best things Amir pointed out yesterday. Operating margins are at 20%, and he thought they would only be 18%, which is a really good way to kind of digest in terms of how the business is not only growing, but gaining leverage. He says right here, as operating margins increase, Palantir grows less and less reliant on interest income. This has been a pain point for many investors. We're probably going to get 25 bips of cuts by JPOW in June, which means our net interest income, which I believe we made $50 million off of in Q1, is going to go down. So we have to have operating income margins start to go higher, because if they don't, then we're just not going to have net income growth the way that we need to have it at given the current valuation that we're trading at. And net income right now is growing basically over 100% year over year, right? It's doubling right now, which is also very impressive. So I thought it was a great quarter. I thought it was a great quarter. Europe is a red flag. That's fair. Karp mentioned that Europe's not growing. He did say that governments across the world outside of Europe are starting to get more interested in Palantir. So he mentioned Asia, the Middle East, etc., which is good. It means that other governments are starting to see the value in having something like Palantir software, recognize the value of utilizing LLMs for what NVIDIA calls sovereign AI, which is government AI. Europe's eventually going to catch up. They're not here right now, but to me, it's less of a red flag and more of an opportunity. And I think if that opportunity can become materialized over the next 5 years, then that's a growth sector or growth vertical for Palantir. That's also going to be very important for everyone to see. Patrick says, I'm off to the cardiologist in 10 minutes. Say all the good stuff early. Patrick, I hope that everything goes well with the cardiologist. I told you guys a couple of years ago, my dad had open heart surgery. So I know a little bit of what it feels like to have a family member who's dealing with some heart stuff. So I hope everything's okay, Patrick, and hope everything goes well. Speaking of hearts, I don't think Palantir broke my heart yesterday. I really don't. And I don't think for any long-term investors, Palantir would have broke your heart. And for the analysts, it seems like they're eating this up, and Palantir's not breaking their heart either. D.A. Davidson raises the price from 100 to 115. Morgan Stanley raises it from 90 to 98. Goldman Sachs raises it from 80 to 90. Raymond James keeps it at a market perform. I believe their price target is around 90. Mizuho raises it from 80 to 94. I mean, and then you got Dan Ives, who raises it to 140. I'll talk about Dan Ives in a second. He said some things yesterday that weren't necessarily the things I agree with on Palantir, but you're starting to have a lot of these banks say, hey, we think that this is growing. And even though the valuation at maybe 114, 115 is too aggressive, we think that they can aspire to get there. So here's what Morgan Stanley said. And this is the new analyst. They fired the old one who missed Palantir for like 2 years. And so this is the new one who they hired back in January, who had a $60 price target, upgraded it to 90, and now it's at 98. He says, what do we learn from Q1? Palantir's firing on nearly all cylinders. On the government side, year-over-year revenue growth accelerates to 45% year-over-year, 139 deals over $1 million. A record $810 million in U.S. commercial TCV was booked in Q1, up 183% year-over-year. TCV is total contract value. International government accelerates to 46% year-over-year from 29%. International commercial was the only weak spot, falling negative 5% year-over-year. So again, if that's your red flag, that is the only red flag, that international commercial is the one that's down year over year. Goldman Sachs, who has a $90 price target, say, we continue to view Palantir as well-positioned to continue to deliver best-in-class growth, given the secular trend towards enterprise AI adoption, the continued push for efficiency and technology adoption, U.S. government adoption of Operation Warp Speed among new defense entrants, traditional defense companies, and the broader manufacturing industry. Our positive view of Palantir's growth is balanced by the longer-term ecosystem risks and the stock premium valuation. So they're saying, hey, our biggest risk right here is that it trades at a aggressive multiple, but that is not a reason that we are staying bearish on the name or having a price target that is in the 30s or 40s, like some of the bears have been suggesting. I thought it was a great quarter, man. I really thought it was a great quarter. Let me know what you guys thought in the chat. If you had one word to describe the quarter, I think the chat yesterday, shout out to everyone who was there on the stream. We had about 15,000 people. That was the most I think we've ever had for Palantir earnings. I think there were a lot of people that just got into Palantir, like literally over the past month. Because while I was reading the chat, I mean, there was like people that I personally know that have been in the name for years, and they were like, wow, this is a great quarter. Stock's down 10%. Okay, cool. Stock was up 70% going into the quarter. And then you had a lot of other people that were like, oh my God, blah, 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 stock's down, blah, blah. And I was just like, okay, this is not just a normal stock is red type of earnings reaction. This is like people are upset the stock is red. Like I didn't see this type of reaction for Google and Amazon, right? And so I think that reaction kind of came from people that entered in a week ago. They thought it was going to go to 150. And, unfortunately, that might not happens sometimes. Like we saw this on NVIDIA last quarter. Last quarter, NVIDIA was at 135, gapped up to 138. People thought it was headed back to all-time highs at 152. Then it ended up going to 120. The next 2 days after that, it was at 107, or not 107, 117. And then, you had the tariff volatility, and then it fell down to those low $100 ranges. So sometimes playing earnings just doesn't work, especially if you don't know the company that you're really investing in. And I think that's where a lot of people got upset here. Outside of that, dude, again, I talked to a lot of people yesterday. This was just one of those quarters that was pretty damn incredible. Austin says the word for Wall Street is catch up. Wayne says the word is flat. Peter says amazing. Arturo says solid. Outstanding quarter. Great quarter. Still overvalued. Currently overpriced. Yeah, I mean, look, we've been saying it realistically since $90 that the stock is expensive here, but they needed a blowout quarter to get a premium that was higher than 125. And they did have a blowout quarter. It just wasn't, that type of a blowout quarter that would really take it higher. And that's okay. And again, I'm relatively impressed that it's holding up only down 8% right now based on this quarter. We'll see at 9:30 how this one opens. I mean, that's a good question. And then we'll move on to some of the other earnings we have right here. Do we gap down today, or do people buy the dip? So Palantir, further downside from 8%, or people will buy the dip. What do you think? I honestly don't know. I'm really curious to see what happens. This is the first time you would think there is further downside, right? Because people are just like, all right, I'm going to sell. But I mean, a lot of selling has been done over the past 24 hours. So the question is, are the people that wanted to sell out of it? Or do we have a ton of stop losses that get triggered, algorithms, et cetera? And so when the market opens, we'll have a much better understanding of ultimately how this one plays out. No share buyback. So I have to go through I think they did buy back some shares. I didn't go through all of the nitty gritty numbers. If someone knows how many shares they bought back, let me know. I think they bought back like 1 million shares. I could be wrong though. I didn't get time to literally look at every little part of it. The one thing I will say though, so some parts I did get to look at last night. Once their 8K goes out, I'm going to really look at all the other metrics I care about. But net dollar retention, which is a big one, 127%, dude. This thing was at 107 4 quarters ago. It's at 127. I mean, what is relevant from that is that they are getting more out of their existing customers. 24% of revenue came from existing customers. This was a good chart that Amir has right here. Than they do have from their new customers. So their existing customers are scaling dramatically. Last quarter, it was 20%. 2 quarters ago, it was 11%. Now it's 24%. Basically, a quarter of that $884 million they brought in is from customers that already have a relationship with them, which means being able to land and expand and then scale inside of existing customers by upselling them on AIP, Warp Speed, what other software verticals and features on top of Foundry that they can sell to these existing clients, given these clients want true operating systems. And in those operating systems, you have all these different nuances of things you can buy from Palantir. I think that is another part that's very, very exciting. And these are really nuanced, fundamental parts of the business that lets a long-term investor know that things are going in the right direction. Things are not cyclical. Things are not just going up for the moment. Things are really becoming structurally ingrained of a true SaaS company to have this type of SaaS margins and type of SaaS revenue growth. That is what creates the SaaS multiples that exist in the marketplace of the stock market, which are some of the best multiples in the world. And Palantir looks like they're becoming a company that can sustain those over the long term, which is what's pretty exciting to me right here. So there you go. Those are my thoughts on Palantir earnings. We do have JPOW tomorrow as well. So whatever JPOW says, that's going to have probably an impact on some of the macro. And we'll have to see what that means for a lot of these growth stocks. We're probably not going to get a cut, but if JPOW signals that we're not getting a June cut, then we're going to have some other problems. But outside of that, I thought it was an incredible quarter. And seems like the analysts agree, even if the stock is down about 8% here right now. Okay, really quick on Dan Ives. So the one thing I didn't like that Dan Ives said yesterday is that he thinks it's going to be a $1 trillion company in 2 years. I mean, look, maybe, but I think it's a bit unrealistic for him to have expectations that Palantir will essentially quintuple in the next 2 years. I think when he says stuff like that, and I love Dan Ives, I'm a fan of him, but when he says stuff like that, it makes a lot of people think that there's way too much hype and people are just saying stuff. So Dan Ives raised his price target to 140. I think his price targets you have to take with a grain of salt because he doesn't really do valuation analysis. He doesn't use numbers. He kind of just, says stuff. And I think he knows this as well. He doesn't really talk about the numbers when he comes up with a price target. And we kind of saw that with him flip-flopping on Tesla with the whole Doge stuff. I mean, like there's no real substance to the numbers that he puts out. He's right on a lot of the macro big pictures around AI. But I think when you say $1 trillion in 2 years, it's like, you're just not going to get a lot of people to take you seriously. Could it happen? Yeah, I would be very happy if Palantir gets to $500 in 2 years. But I don't think it's fair to put those expectations on the company because, it's very hard for companies to live up to that. So Dan Ive says raising price targets of Palantir on 140, reflecting greater confidence in the Palantir growth story while seeing significant traction across both enterprise and federal landscapes with its AIP product moat unmatched in our view. We view Palantir as a generational tech name to own. I agree with all that. I don't think that means it has to be 140 tomorrow. I'm really curious to see what Bank of America does and see if Bank of America raises her price target, Mariana, as well, and what her logic is. So I should be able to get that report later today. And then I'll let everyone know what I think about when it comes to what a lot of these other analysts are saying. Sachin right here says in the chat, Google had $6.4 billion in revenue when it hit $100 billion market cap in 2005. While times have changed, it's still important to understand that Palantir has to deliver 40% growth for the next 10 years. Yes. So this, I think, is very important. 20 years ago, Google had $6 billion in revenue. Market cap was $100 billion. Palantir has basically $250 billion in market cap. Revenue is $4 billion, right? So times are different. Inflation, all that stuff. You get different tech multiples in the market. But we need to get 40% growth for the next at least 3-4 years, if not 5-7 years, to be able to say we can pull back all that growth and be able to justify the current market cap that we are at. And I don't think it's crazy to say Palantir can grow 40% for the next couple of years. Like, I really don't. I think if this is going to be a multi-trillion-dollar market, and if AI companies are going to get the momentum that they've been getting, and the growth that a lot of these AI names have been showing, then the overarching demand for this industry is greater than we've ever seen. Last thing right here on Palantir, and then we'll move on to some other companies. Here's a chart I found yesterday on different AI companies that are AI native startups. They're doing hundreds of millions of dollars in revenue. Total is $1.2 billion in revenue across 20 companies. The biggest one doing about $200 million. One of them that's not on, there it is, $200 million on Cursor. I think now it's $300 million. And then Midjourney, that's a AI image generating company. These startups are only going to keep growing more and more and more and more. And that means the overall CAGR for the AI industry, or the industry of companies and users that are going to be paying for AI, is going to be growing, which is going to be a tailwind for Palantir, which is why they're the fastest growing AI public company in the market at 39%. It's just their valuation is also the highest premium in the market. Just to give you guys a sense of how much the street loves Palantir in terms of its premium, take a look at this picture. We've gotten a premium. There, all the SaaS names at the bottom, CrowdStrike and ARM are more of a semiconductor name, but all of these are at the bottom right here in terms of rule of 40. And then you got Palantir right there at the top. But you also see Palantir's EV sales to forward growth. It is fundamentally disconnected from a lot of these other companies. It's in a league of its own, literally a league of its own. And as a result of that, for them to be in the league of their own and for them to command the type of premium that they're justifying, I think now their forward EV to sales is closer to 80, and their rule of 40 is now 83 as well. So their rule of 40 matches their forward EV to sales, which again it's like 10x more than the other software companies that are trading at the highest multiples, which is around 15 to 10x. CrowdStrike gets a little bit more at 20x. So look, it's trading at an aggressive multiple. The question is, how can we continue to justify the aggressive multiple? And that just means more growth. And that's it. And I think if we get more growth, that'll happen as well. Rob says NVIDIA went from $200 billion to $3 trillion in 5 years. Yes, but NVIDIA put up the growth. You got to remember, you can't just look at the market cap on NVIDIA from $200 billion to $3 trillion. NVIDIA put up at one point, it was like 475% growth year over year. And now it is still 70% growth year over year. So for all that growth to create the momentum for a Palantir to get to like a $3 trillion or whatever, it needs to have just insane levels of growth. And I just think, Dan Ives is being a little bit unrealistic to say they're going to get that. Now, they could. I just don't want to personally put the expectation on the company. Like, NVIDIA surprised everybody. I would rather be very healthily surprised by Palantir if they put up that growth versus, expecting that they have to do that. So, look, great quarter. We'll see what happens to the stock. Ultimately, if you're in this for the long term, you probably don't care that much about the stock. And as they continue to scale, I think Palantir will continue to be one of the most important software companies on the planet. All right, let's talk about some of these other earnings that we had. Celsius, nasty miss right here by 5%.
18 cents versus 19 cents expected on EPS, 329 million versus 342 million, missed by 4%. Kind of makes sense now why Celsius was not really performing over the past 9 green day rallies. Celsius right here down about 3% overnight. At one point it was down 10%. So actually a little bit of a recovery, only being down 3% right here. But this one, not the best quarter. I don't think it's the craziest miss either. I mean, it's a 4 or 5% miss. Like, that's not good, but that's not necessarily, the worst thing in the world. So this one, it was down 10%. Now it's down 3%. We'll see how the street reacts when they open. Revenue is up 8% year over year. It's not really a growth stock, in my opinion, if you're only growing 8% year over year. But then again, it is down 60% from where it was in May of 2024 when it was at that $99 range. And EPS is up 29% year over year, which is not the worst thing for Celsius. We also had another software company, Datadog. Let's take a look at these guys. So Datadog right here, then we'll talk about HIMS as well. Datadog, 46 cents versus 42 cents EPS. They beat by 10%. Revenue, 761 versus 741. Again, a lot of these software companies are showing pretty sophisticated growth, which is not too bad. And it started off with ServiceNow seeing their growth back in last week on Tuesday. Datadog right here up about 1.29%. Not really getting whipsawed down or up like a Palantir did, but Datadog still getting a bit of momentum. And you want to see the overall SaaS sector get some green just to prove that spending is healthy. And then we had DoorDash, which this one is down 4%. I believe DoorDash missed. They missed on revenue by 2%, which isn't too bad. They beat by EPS by 16%, though. I don't have the updated S&P 500 earnings stats, but the last time I checked, 80%, or I think it was 78% of companies that reported beat earnings by an average of 7%. So I think that'll be updated at the end of this week, and then we'll look at the numbers. But it looks like that's going to be pretty consistent, even though some of these companies are missing on revenue. An Amazon beat by 17%, Meta beat by 23% on EPS, DoorDash beating by 16%. I mean, these are pretty hardcore EPS beats. And as long as that continues into Q2, which is going to be the question, if it will be able to with the tariff volatility that hasn't really died down yet, can the market sustain these multiples? And if they can, I don't think that's the worst thing in the world. DoorDash is also offering to buy Deliveroo. I think I saw that headline this morning as well. I think it's $700 million that they're spending on this one, if I'm not wrong. DoorDash, Deliveroo's in the UK, right? Yeah, Deliveroo's in the UK. Oh no, 3.85 billion. Wow. Okay, that's pretty expensive. There you go. Well, it might not be expensive. I don't know their metrics, but $4 billion they're going to be spending on Deliveroo. So you're seeing more consolidation. This actually kind of makes sense. I think Grab is going to be acquiring GoTo. A lot of these companies in the ride-hailing delivery space, we're going to see margin compression, and as a result, we're going to see consolidation because eventually margins can't get compressed to such an extent that no one can make a profit. So that's probably why the stock's down 5%, because they're about to dish out $4 billion to buy Deliveroo. But outside of that, quarter seemed to be pretty good. And then we had Lemonade right here, and then we'll talk about HIMS. Lemonade Insurance Company. This one is up about 11%. All right, so that one getting some love on earnings. These guys beat on the top and the bottom. 9% EPS, 86 cents they lost versus 94 cents expected. Then 151.2 versus 145 million, beat by 4%. So again, I don't own this name, but another company that beat on the top and bottom. A lot of companies showing this trend. And Lemonade up 10%, getting rewarded because of that as well. So there you go. That's what we got for company earnings here on the day. HIMS. Okay, so did this stock do? This stock is down 7%. Look, I think they had a good quarter. We talked about it a little bit last night. I mean, I can't deny the numbers. The numbers are pretty incredible. Revenue growth of 111% year over year, net income up 345%, adjusted EBITDA up 182%, free cash flow 321%, subscribers 2.4 million. They gave 2030 guidance of 6.5 billion in revenue, so they're showing about a 22% CAGR over the next 5 years. I mean, it was a good quarter. It was not a quarter that I would say is something that anyone can be upset about. The thing I am thinking about when it comes to HIMS is why the hell are they down, or why the hell are they short at 33%? I just feel like there's something going on that I don't know about for why the shorts love this stock. And it's a drag on the stock. Everyone talks about how, it's setting up for a short squeeze. The opposite of it not short squeezing is HIMS is going to be they're going to be dragged down with the shorts that are constantly going to be trying to take this stock further down. And so, yes, there could be a squeeze, but those were pretty good results. It's not squeezing right now. Maybe it squeezes in the future, but if the macro sets up an environment where, nothing is really super euphoric, bullish, and things aren't running like crazy, like when HIMS got to 70 back in February, then the short float is just going to be a drag on the stock, which is not going to be the best thing in the world. And number two, the other thing I'm trying to figure out is, do they have a moat, right? Do they realistically have a moat? And right now, I don't know. I really don't know. The more I think about it, the more I conclude there is a moat, but it's a very, it's a slight moat. It's not a moat that's like a Palantir moat or anything like that. Granted, the personalization of the products, the level of growth that they've been able to sustain for the past couple of years. Yes, they spend a lot of money on marketing, but if it's working, then, theoretically it's going to be hard for customers to commoditize them, like an Amazon that comes in and, tries to take their lunch. They just hired a COO who's like the former, I forgot what he did at Amazon, but he was at Amazon from 2005 to 2023. So he's been at Amazon for a long time. So it makes sense that they are starting to expand and develop their momentum. I'm just a little confused of what exactly am I investing in? And that's why I'm not taking a real position. So at least not yet. If I do, I will let everybody know, but I think I need to have a much better understanding of this business. And, when companies like NVIDIA are trading at these multiples, I just feel like sometimes capital might be better. But I do think the covered call premiums are amazing, and so are the put premiums. So I might end up getting put some shares if I sell some puts on this, and I wouldn't hate it, given, again, the numbers they put up yesterday. Pretty damn incredible. Cannot deny these are absolutely exceptional numbers. And it's, trading at a 4 times price to sales forward on a forward basis. But I just want to know, why is it shorted this much? Like, this is like, you would think people would be shorting Palantir given the market cap it's trading at, but it looks like CARP scared them away. So why are they going to HIMS? Like, with this growth, what is the thing about this name that the shorts just love being attached to? And that's something deeper that I'm trying to figure out as well. So, of course, Nate shows up in the chat as soon as we start. Dude, as soon as you mention HIMS, he just puts a HIMS in all caps. He just like shows up out of nowhere and finds a way to talk about HIMS. But there you go. That's what we got on HIMS. Why was Tesla shorted? Well, Tesla was shorted in 2019 because I think the world believed that they couldn't become one of the largest EV companies in the world. They couldn't get profitable. And they wouldn't actually end up scaling FSD at that time. Now, FSD is now scaling 5 years later. So the shorts were kind of right. It took a long time to get it to scale. But I think more importantly, they just didn't believe in the overall narrative. I guess on HIMS, you don't believe that they can become a personalized healthcare company. Like, it just feels weird. And also, people just hated Elon. People have always hated Elon, and they thought he was just this clown that had these crazy ambitions that they can short against, and there was no way he was going to be successful. And they were right until Tesla 20X. So I don't know. I'm just trying to have a better understanding of why people don't like HIMS. And as of right now, I can't really figure out exactly why that's the case, because there's a lot of other companies you could short over HIMS. And even Martin Shkreli, right? When Martin Shkreli said, hey, I wouldn't short HIMS, it makes sense. Why, he's a notorious short seller. So it was kind of confusing to me why the shorts are on it. But someone like Shkreli, who literally shorts for a living, could not find the reason to short. Speaking of Tesla, we got this update right here. Tesla's UK sales have dropped 62% in April, its weakest month in over 2 years per New Automotive. EV demand overall rose nearly 7%. Volkswagen demand and BYD sold a Spotlight up 194 and 311%. Tesla sold just 536 cars in the UK, down from 1,400 a year ago. The revamped Model Y arrives in June. Maybe this is because of the revamped Model Y. Maybe this is because of brand damage, but this is similar to Spain, Australia, France. The Europe sales have just not been strong for Tesla. So we're going to have to see what happens in Q2. Now, Goldman Sachs put out their price target today. They have remained neutral, 235 right here. They say, initial reviews indicate that FSD in China has performed relatively well despite limited data collection, though some note issues such as confusion around local traffic rules and sporadic lane errors. Tesla's FSD is one of several ADAS options in China. There have also been media reports suggesting China aims to tighten regulations on testing, deploying, and marketing smart driving features. Tesla intends to launch its robotaxi service in Texas in June of 2025, and we believe the vehicle cost structure, approximately $35.5K in COGS globally, could offer a cost advantage in the US markets. So you have the stock trading at 270. Got Goldman Sachs stating 235. Question is just going to be if the FSD launch in Austin starts to go well, and then can overall sales start to expand as well. Yeah, 500 cars sold in April and August as well. We are starting to see a little bit more of the lack of sales in Europe. All right, we have about 7 minutes until the market close. Let me bring on one of my favorite analysts to help me dissect the Palantir earnings, and then we'll get into the market close. Steve, good morning. How are you?
Did you go to sleep?
I actually slept a little bit late because I have this cough and it's getting kind of bad. So
because you just said the market closed 2 times. The market's about to open, not close.
You are correct. Honestly, dude, this cough is it's making me go a little crazy. So yes, that's probably what's happening here. I think I'm gonna get some Robitussin and some Sprite and have a little breakfast meal after the show.
That's probably not a good idea. Just saying.
But I heard the rappers, they that. Anyway. Okay, Palantir earnings. How was it?
They were incredible.
So you're bullish?
No, I'm not bullish on the valuation. I'm bullish on the company.
Okay, so talk to me. I mean, why do you think the stock's down 8%? And as a long-term shareholder, how do you think of 40% revenue growth?
I mean, look, this was a great quarter. I don't think anybody can take that away from them. They are delivering on every metric, and something that a lot of people overlooked, I put in my article, was that the 124% net dollar retention is just incredible, especially when you think about the customer and contract growth. I mean, they did 195 new contracts year over year in Q1. I mean, that's incredible on the commercial side. The total customer count, 769, 215 growth year over year. And the deals over 1 million at 139, and then 51 being 5 million and 31 being 10 million. That's incredible. When you think about what the past 12 months has been, they did 468 large-scale contracts of over $1 million. That's big. That's very big. So I'm very happy. From a business perspective, I think they're firing on all cylinders. There are a couple of red flags, though, and it comes on the financial side.
Okay, I mean, what are the red flags?
Look, the bottom line is they have a lot of capital being generated from interest income. I'd have to pull up the exact numbers, but in a second, I'll actually pull it up.
All right, you got 4 minutes, then we have the market open. If you're free after the market open, I can give you another call. And then, are you free after at like 9:45?
Yeah, I can probably be around at 9:45 for a few minutes.
Yeah, that might be easier because then you'll have the numbers with you. I can give you a call. But yeah, overall, I mean, just like so let me just get your quick reaction to the stock. It's down 9%. I think that's more so an understanding of, the quarter just didn't live up to the insane expectations.
Yeah, I think it's going to go down further because I think stop losses will get triggered, but that's not a reflection on the company.
Right.
It's a reflection on the valuation getting ahead of itself. I agree with Ives about it becoming a $1 trillion company. I just don't agree with the time frame. I think 10 years is more realistic than 2 to 3 years. I mean, this is going to keep growing. They may not even hit $1 trillion in 10 years. It may take 15 years. But eventually,
well, your boy Ives says 2 years, we got $1 trillion.
Yeah, I know. I don't see how that's possible, but we'll see. You are seeing an S curve in their revenue. It's starting to gain at a quicker pace. I mean, This time last year, they did 634 million. Now they're doing 883 million. Look, this is an incredible quarter. The problem is their profitability is going to be harder comps this year when the Fed starts cutting with the amount of interest income that's being generated.
Yes, but their margins went from 18 to 20%. So they're starting to make sure business income from operations can offset the lack of interest revenue. But yeah, you have a point. I'm just saying the margins are going up, which is good.
Well, the margins are going up on, hold on, is one of their sets of margins is coming down.
No, that was operating income. That went from 45 to 44. That was, but the overall margins went from 18 to 20% on GAAP earnings as well. So I agree. You have a point. When the Fed cuts rates, we're going to make a lot less interest revenue. But if they can keep being more efficient, that gets from like 20 to 22.
Their free cash flow margin's coming down. Their free cash flow margin in Q3 was 58%. Q4 was 55%, and now it's 34.5%. So free cash flow margin's coming down.
That one,
revenue's going up.
Yeah, that one I have to look at. That could also be because of stock-based comp.
And that's another thing. They need to stop reporting adjusted numbers. I am so sick of adjusted EBITDA and adjusted free cash flow. It's like, what are we doing? They are a freaking huge company. No other company their size reports adjusted numbers. It makes it seem like they're trying to hide the fact that they are diluting shareholders with stock-based compensation.
Yeah, but see, if Palantir didn't have a $300 billion market cap, if they had something that, like, if their stock was at, like, I don't know, $50, no one would care that they're doing adjusted. It's not their fault that they're showing adjusted. I've been
complaining about it since the beginning.
Yeah, I'm just saying, like, their market cap is what the market has decided they're worth, but them reporting these numbers is what they're in their infancy of growth, right? You know, so they're not going to immediately.
Yeah, I mean, they're
not Google.
Definitely still in their infancy. I just think that the net income is going to be a problem going forward, and well, they're doing something really smart. Look, they're diluting shareholders and adding to their cash pile to generate income, but they don't need to continue to dilute shareholders. At some point, that story is going to get played out. And at some point, they're going to have to keep diluting just to keep the same level, because if the Fed comes down 100 bips this year, it's going to be harder for them to generate EPS with the level of interest income being generated.
Yeah. All right, Steve, I got the market open in 10 seconds. I will call you in about like 20 minutes, and we'll get some more of your thoughts on Palantir.
Yeah.
All right, cool. All right, folks, here we go. Day after Palantir Q1 earnings. Let's see how the market reacts. As 1% as we get into the market open. 9:30 a.m. The stock market is now open. All right, wake your ass up. Here we go. Palantir opens the day down 10%. There she goes, 10.2%, 111 on the day. We are going to see if this stalls out or if this continues to have a nasty decline. Volume is at already, how many shares? Almost 14 million shares have been traded right here. So either we are going to see a continued decline or it's going to find some level of room to breathe, and we might get a reversal. SoFi is down 3%. Amazon is down 1%. Google is down 1.5%. Meta is down 1.2%. NVIDIA down 2%, almost back at 110 for NVIDIA. Microsoft is at 423. That was at 432. That was at 435 yesterday. That's down about 1%. Grab right here, 479. That's down 2%. SMCI, they have earnings today, down 2%. Eli Lilly down 0.5%. Bitcoin 93.6. down from 94. Square is at $46. That's down 1%. AMD is down 2.3%. Palantir 111.36, basically down 10% on the day. There's a little bit of a green candle bouncing from 110.85, but still down about 9%. The S&P 500 is down 1%, so that's also not the best thing for Palantir. When the broader indices are down this much, you're probably going to get some weakness in some of these growth names. Tesla down about 3%. Robinhood 46.14, that's down 4%. Robinhood was basically down about 3% yesterday as well. Let's look at some of the semis. All the semis are red following NVIDIA's leave. Qualcomm, TSM, Intel, SMCI, ASML, Broadcom, Dell, Micron, and AMD, all of them down from about 2 to 3%. Max 7s, including Apple, is actually red today. Apple took a nice beating over the past 48 hours. Apple right here, 199. That's a little green. Amazon's down, Tesla's down, NVIDIA's down, Google's down, Meta's down, and Microsoft is down as we open up the day. And then you've got Palantir 112.45. 112.45 here on Palantir. HIMS, let's take a look at that. Palantir, let's see if it can hold this bounce off 110. HIMS is also down 3%, but it's at $40, which is better than being at $38. I don't know, dude. This one's going to be interesting. Palantir now 113. Is the market, are there enough participants in the market that have said, you know what, we don't need this thing to go back down to the 80s and 90s like it was in April during the tariff volatility? We can keep it in a range between, let's say, 100 and 120, which I think would be a massive win, especially if it just consolidates in that range over the next 6 months. I mean, that's not a bad thing at all. Gives a chance for Palantir to really further grow into the valuation. Or is it going to be more dramatic and exceed that to the upside or the downside? I think we're going to find out. But as of now, it's kind of holding in that 111 to 114 range. Palantir right now, 112.45. On the day. Novo Nordisk, they have earnings tomorrow, right? But they have earnings, I think after the bell. They're down 2%. I'll check if they had earnings already, but these guys are down 2% right now. They're down 50% year to date. So this one's already been a beaten up stock. They're going to need a really good earnings to get that to reverse. Palantir 112.17, Meta 590, that's down 2%. Amazon 184, SoFi down 2.45, Nvidia 111. Nvidia, was almost at 115 yesterday, now back down to 111. That's kind of staying in that zone as well. Covered calls on Nvidia, and playing the volatility has not been a horrible option right here. PayPal is down about 0.6, Tessie down 1.72, and then Palantir 111.54. Celsius ripping. Celsius, it makes sense. Yeah, why not? Celsius goes up when everything goes down, and it's been down for the past 9 days while everything's been up. So I actually don't think that's crazy right here. Celsius, 3% up on the day. Robinhood down about 2.83%. CNBC is covering Palantir. All right, let's go to them. Let's see what they're saying. And we'll keep going from there. Again, if you want to get my initial thoughts, you can rewind to the beginning of the show, and I talked about it in depth. Overall, great quarter. Stock just obviously was aggressive going into the bad quarter at all by any means, and I think that's pretty much what you heard from Steve as well, as he was just on. All right, let's get some coverage on this, and then we'll keep going from there.
Trader, but it does mean that it sort of has an outsized role in the momentum trade. So you unwind that a little bit and look at what Robinhood is doing this morning, and you look at all the kind of ride-along stocks that do matter. So it could just be a gut check. Palantir got up to a $300 billion market cap. It's like 60 times next year's revenue, right? So forget about valuation justification. It's all about fundamental momentum. And then even in this past quarter, it's still 55% government revenue. That's a big part of the story. It's getting entrenched in there, but the beat was mostly in government. I think there's an open question as to how much over time people are going to be willing to pay a super premium for that. I do think that just more broadly for Raquel
did talk about the benefits that clients continue to get, in his view, from leveraging their software. Take a listen.
There's a consensus in the market that Palantir owns value creation. And what does that actually mean? It means that when you use our software, when you use AIP, you will get demonstrably more value than what you're paying for, and you will share some of that value with us. And then I would say also, culturally, we just don't see the resistance to the way we roll that we did in the past. We would show up in the past, the freak show, trying to get things to work, not with the wrong access to the wrong people at the wrong time. And that was by intent. And people were very uncomfortable at all levels of the enterprise working with us. Now we have the full stack engaged with us, inside government, outside government, on the most critical issues.
David, interesting. Of course, we've talked with Jim a lot about the degree they're certainly within government sort of working that angle of bringing efficiency in an era of cost cutting.
Yes, and potentially being a beneficiary, as you say, of DOGE and the efforts that have been undertaken there to introduce more efficiency, so to speak, to any number of different agencies in the government. You know, Mike, this is a retail name, right? Fair to say, not really as widely institutionally held as you might think for a $300 billion or almost $300 billion company, correct?
Absolutely. And in the sell side, only 1 out of 4 analysts has a buy rating on it. And it's interesting. I looked through all the reaction to the quarter, and almost none of the analysts are saying, you know, punching holes in the fundamental story or saying they don't have real momentum or that there's not actually a great.
Yeah, I mean, that's pretty much what we looked at today. HIMS right here going vertical, up 4%, 43.70. Palantir getting hit. Continued in an aggressive way, 11.7% right here, 109.20. All the analysts said the quarter was amazing. Fundamentals are amazing. We can't deny the momentum. It's just the valuation is a bit too aggressive. And as a result, that could create a ton of volatility for where the valuation is right now as people decide, hey, maybe we want to get out of this until they can find a way to grow into the valuation. Holding up at 11%, I mean, if it goes down to 90, we'll be down 30% from those highs. So we got to see how bad it gets. 108.94. There you go. So you have some sell side pressure really starting to kick in right here. Again, great earnings, not strong enough on the earnings to justify these numbers. Even I have them growing at least, 43, 44%. They came in at 39. Great numbers. It's just when you're trading at, this type of a market cap, it's hard to get people excited for that. So 108.78 right here, down about 12%. HIMS going the opposite direction. So HIMS right here, very green, up 5%, 43.81, looking like it's getting some real momentum off those earnings. Everything else is pretty red, though. I mean, HIMS is green, but Hood, Tesla, PayPal, SoFi, Amazon, Google, rest of the market continues to go red. Where's the S&P? S&P, a little bit of a V shape right here from down 1% to down 0.79, but still down on the day. So we do have some of that momentum that's creating also some issues with Palantir. Let me see if there's any macro data we got coming out later today. No. Well, we already got something so far. We got our balance of trade, which is essentially the U.S. trade deficit. All right, so we got this data. This is probably why the S&P is down. U.S. trade deficit widened to $140 billion, a record high compared to forecasts of $137 billion. Wow. Imports jumped 4.4% to an all-time high of $419 billion in anticipation of more tariff announcements in April. That sentence right there is why Jay Powell is afraid to cut rates, because you have imports that are up 5%. Those imports that are up could be creating more pressure on overall prices of inventories as prices will go up and people are trying to, buy as much as they can before we have tariffs continue to affect everybody. Trump could reverse this by getting rid of the tariffs, but that right there could be the reason the S&P on a macro perspective is getting hit today, as trade deficits go up and imports also continue to put onward pressure on inflation. Palantir right here, 109.78, down about 11%. So the lowest was 108.70. We got to break that to get below that 12% down on the day. 109.82 is what you're seeing right here on Palantir. HIMS is up 6%. Look, congrats to HIMS shareholders. There you go. I mean, maybe this is a little bit of a squeeze that's happening. HIMS up now almost 7%. The earnings, I think, more than justified a reaction like this. Question is just if it turns into a full-on squeeze, if this is sustainable, and if the market continues to allow HIMS to get some more of this premium. A squeeze really happens when the shorts lose faith that this is the stock to short. And I don't know why it's 33% short, but if the shorts lose faith, then it could create a compounding effect right here. And I think we could definitely see this one continue to gap up. 7.2% right there. Look at that, 45. Volume's really coming in on that one. And you're starting to get some heavy momentum. NVIDIA flat, 111 on the day. That's down 2%. Palantir again, 109.50. That's trying to hold on to keep 109. GameStop right here, down about 0.7%. Some of the quantum names, QBTS, that one is down 3%. So some of those spec names are getting hit. PayPal right here, down about 0.34. And then Tesla down about 1%. The Qs are down 1% as well. So the Qs and the S&P are down 1%. Amit, you sold at 40. Yes, I sold at 40. I bought at 28, sold at 40. Very happy for those that are making money on this one. I didn't want to hold on up 40% in 10 hours, but look, if you're making money, you're making money. If it's green, it's green. If the squeeze continues, then it can continue. 9% right here. This feels a little squeezy, dude. It's hard to deny this is not a bit squeezed. I mean, those earnings I could definitely see. I mean, the implied move was 20% on HIMS, if I'm not wrong. Oh, no, it was 10% on HIMS. On Palantir, it was 20%. So Palantir is down 10%, HIMS is up 10%, and both had quarters that I think could justify up 10%. The problem is Palantir was trading at a $300 billion market cap. HIMS is trading at a $10 billion market cap. So from that perspective, it kind of makes sense right here to see HIMS getting this momentum. Okay, we do have some updates on trade deals as well. I mean, India put out some stuff today saying that they are getting ready to more seriously work with the United States. They said an India official said that trade negotiations with the United States are going well. They also did say that if the European Union puts on a carbon tax, then India will have to retaliate. So they are warning the European Union to not get too aggressive with them. And maybe they're using some of the leverage they have with the United States in the trade deal that they are hopefully going to sign soon. Lutnick did say last week that we are going to get a deal pretty soon. That also could be a reason for maybe why they're being more aggressive with the EU. Let's finish up a little bit of that coverage on Palantir, and then we will keep going from there.
Aggressive commercial adoption. Just nobody can quite get comfortable with where the valuation has gotten to, and the valuation has gotten here mostly because it's been this kind of retail plaything and it's just a super momentum name, and it's been self-fulfilling for a while here. So it is fascinating on that score, where it really isn't as much of a bull-bear debate on the substance as it is on what you're paying for it. And as I said, we had that momentum gut check in the first part of this year. Remember, before we got April 2nd, that was the big story in the markets, why we were having a correction. It was just that you had this kind of overshoot to the upside in the momentum factor. And David, I mean, we talked about that for a month or so. It seemed like it was all about hedge fund repositioning, and it was. And then we got the tariff stuff. We got a fuller dive in the market, and now it's about whether that part of the market can maybe take over again, or if in fact it's on more stable footing.
And the interesting thing here is that Palantir got back to all-time highs, but the market didn't. So there was a big rebound on Palantir from those February highs, even if the market itself did not rebound. HIMS right here, up 12%. I think she's squeezing. I think she is squeezing. And the thing about the squeezes is that they don't stop at 12%. I mean, they can get pretty freaking aggressive right here. I think we saw HIMS get to 72 back in February. So Palantir got back to its all-time highs from February. The market didn't. HIMS did not get back to its all-time highs. If HIMS does get back to those levels, then it would obviously be a very, very aggressive. It would basically be a doubling of the stock, or like an up 80% from where it is right now. And, that obviously could be something the shorts cannot continue to handle, which means they would continue to cover their short and the stock would get hit even more. 13% right here on the day for HIMS. Paul Tudor Jones just said that the stock market will hit new lows even if Trump puts China tariffs to 50%. So you got one of the legendary billionaire investors saying, hey, if these tariffs do not come down, we are going to get lower than the previous lows that we had. And we got to get those China tariffs way below 50%. Right now, they're still at 145%. We haven't taken them down. So until we do, the volatility of, hey, a potential continuation of not really a crash, but a weakness in the confidence in the market, given we might not get any sales or might not get any deals, could be an issue. Palantir right here, 109. That's down about 11.89%. Google down 0.5%. Meta down a third. A little bit of recovery. Robinhood's at 47. It looks like the S&P is slightly getting some green candles right there, not being as red as it was before. Nvidia trying to get back to 112. Reddit 114. Archer down 2.53. AMD up 1.95 or down 1.95. And then HIMS up 14%. It's pretty incredible. Pretty incredible. I think the shorts are squeezing. You guys are saying GTA 6 had a new trailer get released. So Take-Two is up 1%. I mean, that doesn't matter too much though, right? We need the game to come out. And the game's not going to come out for another year. So I don't think the stock is going to pump on the trailer. But it's good to see that we have a trailer coming out. But this one's going to be, until May 2026 to really see how aggressive the momentum is going to be. All right, HIMS 48. So let me check resistance at 50. I mean, it looks like this thing really wants to make its run to get there. Let's pull this up and see. HIMS right now, 48.43, up 15%. It obviously feels like it's a squeeze happening. $50 is, yeah, dude, there's 7,000 shares of resistance at $50. At 49, there are 5,000 shares. So, I mean, this really isn't one of those things that's going to be super hard if the momentum continues. But You got to see if that momentum actually can continue right there. What else do we have? Ahmed, who all is speaking today? There's not really a lot of people speaking. I think we have some Fed speakers, but tomorrow's the more important one. Tomorrow is when we're going to see what Jay Powell has to say for that FOMC meeting. So outside of that, yeah, there's nothing crazy. I think Bessent's doing another. Oh, Bessent's testifying in front of Congress today, I think. So he had a meeting yesterday. Bessent didn't really say anything too crazy. You know, he kept saying we have trade deals down the pipeline. I mean, all of us are waiting for those trade deals. But outside of that, nothing too crazy. Ford had earnings today as well. Ford, let me pull them up. Ford, I believe they beat on the top and the bottom. Ford is up 1%. All right. Ford got a nice little 6% dividend right there. So if you're buying Ford, you're mainly buying it for the dividend. But that is up 1%. That got to $8 back in April as well. So you're up about $2 if you bought the stock at that time. Palantir right here, 109, still down 12% on the day here right now. I don't know. I mean, if this thing can hold 108 to 114-ish, that range, I think that would be impressive after earnings. If not, realistically, I mean, you've got $100 coming up if it continues to see this type of weakness, especially if Jay Powell says something that's just bad for the entire macro. Like, if we had earnings before the June rate cut, this would be a bit more easy to stomach a quarter that wasn't as explosive. But if Jay Powell gets bearish, and I've been reading a couple articles and, you know, they're suggesting that Jay Powell is going to be more hawkish than dovish because he's still afraid of the tariffs. I think that would be a mistake. I think it's finally time to cut rates. We are seeing what's happening in oil, shelter. Like, at this point, we are going to easily cause a recession if we don't think about cutting rates in June. Wow. Holy crap. Oh my. This is not good. This is not good. The Fed probabilities for June went to 33%. This thing was at 57% like 2 days ago. Dude, I see. This is what I'm saying. Those articles I was reading were probably based on the idea that the sentiment is turning hawkish. That number was above 50% for freaking the past month and a half. So the fact that it's below 50, but look at that. There's a 65% chance now that the Fed probabilities show no cut. It's not good, bro. Oh, I know why that happened yesterday. I didn't even check. Yeah, the non-farm payroll numbers. Yeah, those numbers were so good on Friday. That's probably why the probabilities went down. Private ADP payrolls were also not bad at all. But still, dude, I don't know if the labor market's that good where we can afford to have double the rate of inflation as the federal funds rate. That's a bit aggressive. As far as that says, no one knows what's happening. Dude, that's not good because at least for the past 2 weeks, I was under the impression that a June rate cut is at least 50% of a chance. That's what the future probabilities were saying. Palantir right here, 108.41. But now it's less than 50, significantly less than 50 at 33%. This is the Fed basically probability arguments insinuating that, hey, Jay Powell's going to be hawkish tomorrow. That's what they're saying right here. Robinhood right here down about 3%. Tesla down 2.2%. I mean, this is basically making the case that Jay Powell's going to be hawkish. HIMS right here was up 15%. Now it's up 9%. So you had a 6% swing from HIMS being up almost at 50, now back at 45. This is them saying, we think Jay Powell is going to highlight the strength of the labor market and the uncertainty of the tariffs and put those two arguments together to ignore the fact that inflation's coming down naturally and that tariffs will be deflationary because they will decrease demand, which will decrease prices. And Jay Powell's going to err on the side of being more hawkish than dovish. That's not really good. I really didn't expect that. I guess I forgot to look at it after non-farm payrolls. I was under the impression that a June cut is, more likely than not. HIMS right here up 7%. S&P is down 1%. S&P is getting hit right here. Yep. S&P. Wow. 1.111. All right. So new low of the day on the S&P. That's not good for Palantir. Look at Palantir 107. There you go. I mean, the S&P is going to fall 1.5 to 2% today. I mean, you're going to get some pain on Palantir. 13% down right here on the day currently right now. So we have that Fed probability. I'm trying to pull up another thing right here. on another data point to look at, but that is the big one that just got updated. And again, we had that deficit widen today, which was not good. 419 versus 401, which was expected, which is also creating some pain. Where's Rocket Lab? We haven't looked at Rocket Lab in a bit. Rocket Lab is down 3%. Yeah, I think if the S&P falls 1%, everything's going to get hit today. Maybe not HIMS, as it's still up 8%, but everything else is going to have some issues. Intel right here down 2%. AMD is down 2.8%. DoorDash had earnings today. They are down 7%. Lemonade had earnings. They are up about 3%. We had a couple other companies had some earnings today. I'll pull those up in a second, see how their stocks are doing. Reddit's down about 4% right here. Datadog had earnings. They had a beat on the top and bottom. These guys are also down 3%. So everything kind of getting hit here right now. Oh, gold is pumping. Dude, gold pumped last night. Gold went up by 1% in 5 minutes. I don't know what central bank or what foreign entity decided to move gold as aggressively as it did last night, but it literally looked like a meme stock. Gold was up 1% in 1 minute. And, that's a bit unsustainable, but that's what we saw last night. I mean, a lot of people are saying it's China. We looked at the gold ETF inflows yesterday in China. They are pretty aggressive, so I wouldn't doubt that it could be something like China. But it's more people feeling, hey, there is volatility, and we are a bit scared of that volatility. We looked at Tesla registrations in the UK that weren't the best. Here's a graphic on a bunch of different areas in Europe. So Spain's down 36%, Germany 46%, Belgium 55%, France 59%, UK 62%, Denmark 67%, Netherlands 74%, Sweden 81%. I don't think all of this is just because of the Model Y ramp up. Some of it might be, but I think there's probably a hint of anti-Elon sentiment that's probably creating some of this pain. And that's also why we're seeing the volatility that we're seeing right now in the context of Tesla. But Tesla's still holding up pretty nicely after those earnings at around this 270 range. Double top on Palantir. Yeah, so a lot of people have been calling that as well. I mean, look, maybe. There's no such thing as a triple top. So if we retest that 125 level, then maybe we're breaking through. But the problem is, how do you get back to 125? It's not going to be easy. There's going to have to be really strong growth, especially if the macro and the S&P. I mean, the fact that we got to 125 without the S&P getting back to all-time highs was incredible in and of itself. So might not be that easy to get back there, at least in the short term. Again, if you are a long-term bull and you read the analyst reports this morning, every analyst raised their price target, with the highest being at 115 outside of Dan Ives at 140. None of them had an issue with the quarter. All of them just cited, hey, valuation's aggressive. And I don't think that's something that anyone is denying. What does a double top mean? A double top is essentially when you see a stock try to break a prior all-time high and it goes for it 2 times in a row and it's not able to do it, which then signals that it's topped out. And that's what we call it, a double top. Here's a picture of what that looks like. So as you can see right here, February, Palantir got to 125, tried to break through, couldn't. And then yesterday, Palantir broke through for like 2 minutes after earnings at 130, and then it couldn't break through either. So, this is what we got to see. But again, I don't think anyone can deny the valuation was aggressive. We know the valuation was aggressive. It's taking a probably healthy breather, one could argue, given those earnings. And I wouldn't be surprised for it to go down even further. But if the bet was yesterday they could show 45, 50% growth to keep that multiple up, they didn't do that. It was pretty damn good, but they didn't do something like, they didn't have an NVIDIA type of quarter is what I'm trying to say. And maybe that quarter is coming up, but right now it's not there. And so stock getting hit by that, I don't think is that crazy. If you sold covered calls though, congrats. Covered calls, sellers. I mean, you are benefiting from all that premium. I mean, covered calls should be up almost like 70 to 80% today. A 13% move down on the stock. Those covered calls, especially if they were for this week, you're probably up basically 90% on those right now, which is not too bad. Okay, let's give a call to Steve. Let's see if he picks up, and then we'll get more of his thoughts on these earnings. Farzad says, I still don't think we get clarity on the market until June, July timeframe. I agree. I think a lot of it is contingent on this China deal. And, it's not anywhere near close yet. Even Bessent yesterday, he was like, we have 18 trading partners. Let's not talk about China. 17 of them have come up to us with really good deals. So even Bessent is saying, let's ignore China for a little bit. Steve, good morning. You're back on the show.
Good morning.
Okay, so Palantir is down basically 15% right now.
Mm-hmm.
And we were talking essentially about how it was a great quarter, but the valuation was not able to sustain it. Margins were okay, but they were not great. I guess your reaction to this.
Margins were good. Margins were really good. Everything was good. It's just, it was priced for perfection, and it wasn't perfection. They needed a big beat on EPS. Okay, you can't trade at 600 times profitability and just meet expectations on EPS.
That's a point, because we beat on revenue, but we did not beat on EPS.
Yeah, and the revenue beat wasn't that big of a revenue beat. It was $20 million. Now, granted, it was a revenue beat, and I'm happy. At the same time, we have to be realistic about things, and coming in line with EPS when you have this type of valuation isn't great. If their valuation was $50 billion, be a much different story.
100% agreed. Yeah,
and it's just being objective.
No, that is objective, and the reason I think they didn't beat on EPS is because, and this is the dirty part about Palantir, they have a lot of shares outstanding. They do a decent chunk of dilution every year, and
Can we talk about that?
We'll talk about that in a second. And they can't really buy back their stock because they know the stock's expensive, right?
When companies dilute shares and they issue new shares, there is less EPS to go around because you're dividing the operating earnings by more shares. So in order to outpace that, they need to grow their earnings by more than the shares they are issuing.
Right.
They're kind of just flatlining at this point with that. And my fear is that on a trailing 12-month, including this Q1, so the updated numbers, they've generated $574 million in net income. 35.5% of that came from interest on cash, $203.84 million. At some point, that's going to dry up a little bit. It's not going to go away, but that's going to decrease to 150 million or so. And it's just going to make the comps harder, especially when they issue more shares. And that's what I think people are overlooking.
Yeah, I don't disagree with that. I'm putting your article right here in the chat.
Thank you. If everybody reads it in comments, I will answer the comments later today, but I promise I'll respond to everybody.
If you had to pick one thing from this article or from one thing from the earnings that you thought was like, as a long-term bull, when you bought this thing at $10, you're just really impressed, what would it be from this quote?
The net dollar retention is incredible. I don't think they get enough credit. I don't think they talk about it enough. Their net dollar retention is freaking incredible. And 100, you got to think about it like this. At 100% net dollar retention, that means that you are keeping every service in your current contract and you're paying the same amount year over year. When you have 124% net dollar retention, that means that the company is upselling you on new features and services and you're increasing your spend.
Yeah.
When you see a net dollar retention of 124% combined with the amount of customers and the amount of contracts that they're growing by, it is very bullish for the business. And I still think this is one of the greatest businesses. It's got huge margins. You got a third of every dollar, or just more than a third of every dollar, going to free cash flow. You have about a quarter of every dollar hitting net income. These are fantastic margins. The problem is that they continue to dilute shareholders, and the valuation is absolutely crazy. And at some point, fundamentals matter. At some point, numbers matter. At some point, a cool story and an engaging story isn't enough. And we are seeing that right now. It's when you're a $300 billion company and you generate a tenth of the revenue and an eighth of the profitability as a company like Adobe or Salesforce or Cisco, at some point that's going to catch up with you. And we're seeing it right now. That doesn't mean that Palantir is a bad company. That doesn't mean that the bulls are wrong. It just means the valuation got ahead of itself.
I think that's really objective, and it's not crazy to say that, especially if you're a long-term investor. This is not the same stock it was at 30. The valuation is up there, and they needed an Nvidia quarter to justify 300 billion, which I kind of thought they would do. That's why I bought 100 shares yesterday. I was like, you know what? Let's just do a gamble. Let's see if they. And they had a great quarter. It just wasn't one of those Nvidia quarters.
It was a fantastic quarter. I don't think anybody can objectively say it wasn't.
And okay, so then where do you think fair value is now after that quarter? How do you think this settles out?
You don't want that answer.
No, where do you think? $80, $90? How do you, $70? Where do you think? I think 70 to 100 is the range that it's been at all year. And I wouldn't be surprised if it gets there again. But I also think you would need a lot of selling after this recent run up to get back down to the 70s.
Let's put it this way. At a 65 billion market cap, it is still trading at 113 times its net income and 49 times its free cash flow.
Okay, but realistically, where do you think the stock ends up?
I'm not sure what that equates to on a share price, but 65 billion market cap is still double the premium on free cash flow of Alphabet, of Salesforce, more than double the valuation of Cisco and Adobe.
Okay, so that would be a $30 price. So my question is, because I know you don't think it's going to 30, realistically, where do you think it's going?
Where I think it's going. So where I think it's going and what I think fair value are two different questions.
Okay, so my question is, where do you think it's going?
Fair value is between 30 and 40. I think it'll settle in a range of 70 to 100. I think that's what I put in my article. And I think it'll trade within that range, but I wouldn't be surprised if it goes lower. But I think it'll establish a new base. It's not establishing a base of 115 or 120, I don't think. I think it's going to go a little lower, and there's nothing wrong with that. Look, it is too expensive here. There's no way to think that it's not expensive. And I listen to Ives, and you know I respect Ives, and we've interviewed him. You've interviewed him a lot. I mean, I disagree with his time frame. I agree with the premise of $1 trillion. I disagree with the time frame. I mean, he's saying 2 to 3 years, okay? In 3 years, compounding at 100% on revenue and profit. 3 years of that, which they are not guiding for, they still would do less revenue and less profit than Salesforce, Cisco, and Adobe. And none of those companies are over a 300 billion market cap. So at some point, the bulls have to be realistic about Palantir's future and have to understand that every company is coming for them. Now, whether we get into a conversation about who's better, who's not better, you can't discount that Microsoft Fabric could be a threat. It doesn't mean that it's going to have an impact, but it could be a threat. It's not like these companies are just sitting on their hands. And if Palantir isn't going to compound at 100% and get to somewhere closer to where these companies are generating 10 billion in profit, it's a little hard for me to get to a point where you can give it $1 trillion handle when the reality is their net income in 3 years from now may be $1.5 to $2 billion. I mean, Tesla doesn't even have that valuation.
Yeah, I mean, I don't know if it's in the next 3 years, but I think I agree with you. I think the range is probably 70 to 100 where it settles out at. And if it goes, below 50, I think that's really aggressive. I don't see that happening, but I think 70 to 100 is not
I don't think that's going to happen. It was too good of a quarter, in my opinion, for it to get to that level. Like, it was a really good quarter. I don't think that there's, except for valuation, I just don't think that it would get to 50. But I think 70 to 100 is realistic to trade at. But the problem the problem that's going to be established is that on an earnings per share basis, because that's half of what the street looks for. The street looks for revenue comps and EPS comps. The EPS comps are not great when you think about how much EPS they're expected to generate. And when you're diluting shareholders this much, it gets harder to hit those comps. And there's no reason for them to dilute shareholders. They have $5.5 billion in cash. There's not a single reason for them to issue shares.
Yeah, I mean, look, I agree. I do think though that there is a I mean, this stock bottomed at 62-ish on April 8th. For it to really go below that and get into that 40-50 range, you would need to see an earnings picture that just is horrible. And from what I saw yesterday,
but what really changed in the past 2 weeks? Nothing really changed in the past 2 weeks. I mean, they didn't beat on the earnings.
Well, I would say no,
it was a continuation of Q4 2024.
It's fair. I think now the expectation is though they're going to grow 40% this year, which is definitely a heightened level of revenue growth. But I agree. I think the range settles in between 70 and 100, and I think that's how it plays out. Could it go lower? Sure, but I don't think it necessarily has to go to $30 again. I think there's just too many people that would see a low price at that 50, 60 range and say, you know what, the premium is worth it. I'm buying more.
Well, you know what the problem is going to be if stop losses start getting triggered. People are buying into earnings and it's down 10, 15%. That can really sell off quick.
I mean, I think it's down 15%. I think the stop losses have been triggered if it's already.
Well, they may not have even start being triggered yet. You could have a lot at 100. They may have just started.
That's potentially be happening.
Yeah, we don't know, and that's the problem with this, because now there's no catalyst for this right now. Think about it. Every catalyst they talked about, and Karp gave more of a story than anything yesterday, I recall. And it's going to take a lot of announcements to change the narrative at this point.
Yeah, I mean, I don't know if we get back to 125 anytime soon, but hopefully we can sustain.
Listen, that's why I named the article what I named it. I think the top's in. I don't think we get back there for a long time. And look, I really do believe it's overvalued. And it scares me that people were not selling and taking profits. Like these are gains that people get once in a lifetime. The fact that people were still holding is crazy.
No, but that's not fair. That's not fair. That you didn't sell either. So it's more so a question of it's more so a question of retail that bought at 90 that didn't sell. But if you bought at 10, there's a difference.
So let me.
Are you making like a sandwich or something? What are you doing?
No, I'm starting to cook.
Steve, you're in front of 6,000 people. Like.
Right now I'm chopping my onions.
We don't need to hear chopping your onions when like.
You wish you were having what I was about to make.
You're making me cry, Steve. Those onions are really making me cry. But
why? They're red onions and they're beautiful.
Well, it's a little annoying to hear people hear a knife, and there's a couple thousand people that actually care about listening to you. You would think you actually,
So yeah, I'm trying to multitask. So.
Oh my goodness, dude.
All right, I will put the knife down.
No, but this is why people love you. This is why people love you. They're gonna love that you're cooking onions right now. They're gonna love it. They're gonna be like, Amit, you're being mean to them. This is what's
they saw what I was gonna cook.
See, look, let the man chop. God damn it, Amit. See, this is. Farzad says I care more about the food. This is goodness. Wait, what are you making anyway? What are you making?
All right, so I'm chopping the onions. I got to chop the red and the orange peppers, and then I got my garlic. I got broccoli, cauliflower, some Munster cheese. I'm probably gonna put 4 or 5 eggs in there.
All right. Anyway, what were we even talking about? Yeah. I don't think it's fair to say people should have sold, because if you bought at 10, and you're long, it's whatever. But if you bought at 90,
and look, there are 2 types of investors: investors that are seriously in it for 10 years, like you and me, and then investors who bought it because they thought it was going to go up. You and I have both said we don't. If it goes to 50, we're not selling. We are in this for 10 years because we think this is going to be a $1 trillion company.
Yes.
I have said that for a long time, but that's not every investor. And not every investor is going to hold something for 10 years. And when I see people holding it and still buying it at those levels, which I don't think is necessarily institutions, that worries me that we're getting cult-like stock status.
Yeah, I mean, look, if you bought at 95 without knowing where it was going to go and then assumed it would go to 150 on earnings, you're probably pissed off. But if you bought at 20 and you're not selling because you really want to hold it until it gets to $1 trillion, which might not happen in 2 years, might happen in 10 years, then I don't think it's concerning that people didn't take profits there. Even though I know a lot of retail that did take profits, so I think there have been people that have taken profits, but if you haven't, and you really are long, then it's okay. But if you bought it at 120 and you wanted 150, I mean, that's the hard part.
Yeah, and look, I'm very happy for everybody that made money on it. I mean, that story that you said about the person paying off their house, that's incredible. Love hearing that. Incredible.
Yeah, someone literally posted on Twitter, they sold their last 500 shares, they paid off their house, and it's like, that's what you should do. That's what the market is for.
Yeah. And, you know, this is just, and I've been saying it for a long time, and I haven't changed. For the past probably 5 months or so, I have gone neutral on Palantir because the valuation got crazy. And I have given it a generous premium on what I think fair value is, because it's much higher than what most companies will get. But it is not a 300 billion market cap. When the market has established that other SaaS companies, I mean, at the end of the day, Palantir is a SaaS company that dominates the AI space. But the software platform is a SaaS-based platform. Now, when Adobe, Oracle, when Salesforce, when they're not given those types of premiums and they're generating so much more in profitability and revenue, I'll take Cisco out of it because they still have a 50-50 split between hardware and software. But the market is showing people what a 300 to 500 billion market cap company is.
Right.
They're showing people that. And Palantir does not generate anywhere near those numbers. And the most incredible growth does not get them to those numbers in 3 years. So, you know, people were trying to argue with me about terminal value, but that argument doesn't really work either with terminal value, because you're pricing in all the company's future cash flows. Well, Palantir's starting at 1.2, 1.3 billion on free cash flow. You want to compare them against Salesforce terminal value. Salesforce is starting at 10 billion free cash flow, and you're going out. So that argument doesn't work either. It just got too far too fast. There's nothing wrong with that. But at some point, these numbers come back to reality, and it looks like that may happen.
Yeah, and also it's like it's not a bad thing that it's not a bad earnings, but when the stock pumps a bit too aggressively going into earnings, it always sets up unrealistic expectations for any company. We saw that with NVIDIA last quarter as well. And unfortunately, the expectation is to go from 125 to 150 without a blowout quarter, which it was a blowout quarter, but it wasn't a blowout quarter. You're going to get the stock to dump. And we've seen this. So how many times have we seen this before where expectations got too high?
I mean, Apple was the only thing holding the market up in 2022. And eventually that sold off 40, 50%. Amazon was down 50%. Alphabet was down 50%. Meta went from like 400 to 92 or 88 or whatever it was. The best companies in the world experienced this also. Now, granted, that was a crazy bear market because of how overextended everything got, but it still happens.
Yeah.
So to think that it can't happen to Palantir is naive.
I agree. All right, last question for you, Steve. JPow's cutting rates probably not tomorrow, and now June probabilities are down below 50%. What do you think is going to happen with the Fed?
Well, they're cutting before they go to Jackson Hole. I mean, it's either going to be June or July. It's not going to be tomorrow.
Well, probabilities are showing no cut in June, which is not good.
Well, it's too far ahead to know with where it is. Oil is under 60. That's a big thing. If oil keeps going down, if oil hits 55, you're going to see gas prices very low for the July 4th weekend. And I think you're going to see inflation down quite a bit on the next report. And that may be enough to get them to start cutting.
All right. There we go. Steve's article right here. I'll put in the chat. You guys can check it out. Steve, enjoy your eggs.
Oh, by the way, I was talking to Telus last night, and then I started looking at the HIMS call options. I got to tell you, cash secured puts on HIMS, the valuation, the premium is crazy. We need to look at that. And I think NVIDIA is being treated unfairly. That's just my.
Yeah, I've been looking at the premiums too on HIMS, and it's pretty good. So I mean, just even wheeling the stock is not horrible.
Pretty good is an understatement.
Yeah, that's good. There's a lot of people in this. I mean, this was up 15%. Now it's up 7%. Like the volatility in this is crazy. And it's probably because of the high short float as well. All right, Steve, appreciate you. Enjoy the eggs. We'll talk later.
Got it.
All right, let me switch to Bessent, who's testifying right now. Let's see what he's saying, and then we'll go from there.
98% of our trade deficit is with 15 countries. 18% of the countries are our major trading partners. And I would be surprised that if we don't have more than 80 or 90% of those wrapped up by the end of the year. And that may be much sooner. That I would think that perhaps as early as this week, we will be announcing trade deals with some of our largest trading partners. They have come to us with very good offers. And you know what I will tell you is that in negotiating with some of them, they may not like the tariff wall that President Trump has put up, but they have them. So if tariffs are so bad, why do they like them? And then more insidious, we can see that from a practical matter and from academic research, are the non-tariff barriers. If you were to look prior to the escalation, I believe Chinese tariffs are only 5%. So clearly there's something else going on if they're accumulating these gigantic surpluses.
The president released his skinny budget for the year, fiscal year 2026 on Friday.
On an IT modernization project where perhaps up to $50 billion of taxpayer money has been wasted. We are right-sizing that. So the substantial decrease in the IRS budget is largely in IT. We have had a large number of employees take the option for early retirement or for retirement. And again, let's look at the numbers. We are just taking the IRS back to where it was before the IRA bill substantially bloated the personnel and the infrastructure.
Thank you. And now I'll recognize Ranking Member Hoyer for any questions he may have.
Mr. Chairman, let me ask you a broader question, Mr. Secretary, at the outset. The president has been talking about recession and the acceptance of a recession in the short term. Do you believe we're in a recession now?
Congressman, I believe in data, and there is nothing in the data that shows that we are in a recession. As a matter of fact, the jobs report has surprised to the upside.
The job report, of course, less than the average for the Biden administration last in 2024. But the GDP went down this first quarter of the Trump administration. If we have a negative growth in the second quarter, which is, I suppose, the traditional definition of a recession, would you agree that we are in that recession of which the president speaks?
Yeah, Congressman, these economic numbers are noisy and subject to substantial revision. So I, having looked at a detailed analysis, would believe that the first quarter GDP would be revised upward. And I would also, with regards to your remark about where we were last year, we were spending 6.7%. We had a 6.7% fiscal deficit, the largest we've ever had during peacetime or non-recessionary times. So the easy thing would be to keep spending, to keep the economy running on an unsustainable path of government spending.
Let me remark, because you mentioned this, I think in our meeting, we had a spending problem, not a revenue problem. I want to talk about the revenue problem. Let me suggest to you, my view is it's neither a revenue.
If I see any news, guys, I will update you. Right now, there's no crazy news. I mean, Bessent Speaking is pretty much what the main thing that's happening right here. But I don't see anything else going on in the markets. HIMS is up a little bit, Palantir around that 105 range, but nothing else too crazy going on right now.
Nor a spending problem, it's a pay-for problem. If we would substantial decrease in the resources of the IRS, particularly in enforcement. As the blue representing an increase in filings, the orange representing the nominal, and the dotted line, the net actual value of the funding for IRS, particularly enforcement. The budget proposes substantial cuts. Have you or anybody done a analysis of the ramifications of those cuts, both in the short term and in the long term, in terms of your ability to collect revenue? Let me paraphrase, not paraphrase, but give a, in your discussions, you said you were not going to sabotage, that we had in my office, sabotage collections. Are you confident, in light of the fact that any IT, and I agree with you, we've wasted a lot of money on IT, that any IT will be accomplished within the next 36 to 48 months, and therefore justify a reduction in personnel?
Congressman, let me work backwards there. So I am confident that we will make substantial progress in the IT and right-size the payment system, the collections system. As I've repeatedly said, my priorities are collections, privacy, and customer service. And again, the substantial increase in the enforcement group, there is nothing that shows historically that by bringing in unseasoned the collections agents that results in more collections or high-end collections. It would be like sending in a junior high school student to try to do a college level class. That becoming a high-end IRS collections agent is something that one grows into. So I believe through smarter IT, through this AI boom, that we can use that to enhance collections. And
S&P is trying to go green. We got some green candles across the board. Palantir, Nvidia, Hood, Amazon. I mean, maybe whatever Bessent is saying the market likes, but we are trying to get back green. It's not as bloody red as it was about 20 minutes ago, but we got to see if this momentum can continue.
Well, I would expect that collections would continue to be very robust as they were this year.
Chair now recognizes the gentleman from Arkansas, Mr. Womack, for any questions he has.
Thank you, Mr. Chairman. And thank you, Mr. Secretary, for your service and for being here today in front of my colleagues. I'm going to ask a question that I'm sure you've never been asked before, but I'll give it a try here. When is X date?
Congressman, we are, as I said earlier, we still take in a large amount of the paper returns. So every Friday, I get a summary. And if you can believe it, as you know, tax day was April 15th. We are still tallying that. So that we will share with Congress when we believe we are approximating that date. So that will be forthcoming. But I will tell you, just as an outfielder running for a fly ball, we are on the warning track. And when you're on the warning track, it means the wall's not far away.
So it's not today, may not be next week, but it is fast approaching.
And of course, the United States government will never default.
X date, I think, has to do with our debt maturities, if I'm not wrong. I thought it had to do with trade deals. There's a little bit of a weird question, but I think it has to do with when are we going to have to roll over the current debt that we have. Our X date is when the USA can't pay its bills. Exactly. That's correct.
We will raise the debt ceiling, and Treasury will not use any gimmicks. We will make sure that the debt ceiling is raised.
You have already answered a couple of questions about the president's budget, and I'm going to ask maybe a little differently. Um, the president's budget request for fiscal 26 looks very different from President Biden's budget just last year, and I have been a longtime proponent of getting our fiscal house in order, and I applaud the president's attempt to get our fiscal house in order. During my tenure as chairman of the House Budget Committee many years ago, I co-chaired the Joint Select Committee on Budget and Appropriations Process Reform, and many of our recommendations are included in Trump's requests. It's no secret we're heading toward a big and needed change within the federal bureaucracy. That said, his budget request for the Treasury is $11.5 billion compared to FY25 enacted at 14.2. Now that's a 19% decrease. You've already mentioned that we have savings achieved in contracts regarding IT services and this sort of thing, and we've saved the American public a lot. But you've also said that IT remains one of our biggest challenges, particularly within the IRS. So how is it that you're going to operate with a smaller budget that still serves the needs of the American people?
Sir, part of that has been bringing people back to the office. So on March 10th, we reinstituted a work from your office program. And again, I think it's going to be efficiency. We have asked for more money for many of the priorities. The Treasury Foreign Intelligence Network and the Office of Foreign Asset Control, OFAC. So we will be keeping the American people safer. And again, we think through efficiency gains, the federal government historically does not have productivity increases. And as I've continually pointed out, DOGE is the Office of Government Efficiency, not the Office of Government Extinction or Eradication. So I think that it is not a big leap to do much more with less.
Are there $2.5 billion worth of efficiencies?
Well, again, just two of it is in the IT department. And if you were to look, Treasury processes about 1.5 billion payments per year, which is like a mid-sized U.S. regional bank. We have had many of these banks come in and talk to us about their payment programs, and their departments are 1/10 the size and 1/10 the budget. So allowing for the redundancies that we would need as a government agency, then we think that we do need to be bigger and more fulsome, but there are substantial savings to be had.
I want to ask one more quick question because I know we're probably not going to have a second round. You have been a proponent for better financial literacy in this country, and your background is, is evidence of that. Quickly, can we do a better job in this country of educating young people on matters of financial literacy?
Any increase that we do would be a better job. But we just hosted Financial Literacy Month at the Treasury. I only had 2 months to get ready for it. I can tell you that every April we're going to do more and more. But the key to financial independence is financial literacy, making good choices, and not, I don't think it comes from more regulation. I think it comes from more financial education.
Thank you very much.
The chair now recognizes the gentleman from Wisconsin, Mr. Pocan, for 5 minutes.
Great. Thank you, Mr. Chairman. And thank you, Mr. Secretary, for being with us. My main concern is, I think, what people are looking at the economy. The first 100 days, lowest stock market since Richard Nixon, not usually a measure people are shooting for. On tariffs, the fact that last year we had an effective rate of about 2.5%. I think the Yale Budget Lab, and I believe you went to Yale, has said that effective rate is closer to 28%, the highest since 1901. I know that some of that's changed because the tariffs are on again, off again, some on again, some off again. somewhat chaotic. I believe as your term is what, crazy Ivan style. I compare them to how a monkey throws dung. You're not exactly sure where they're going to land. And that's the concern I have as a small business owner. And I know Ms. Luzenkamp-Perez is as well. You know, I've got small businesses really worried. You made a comment about while cargo volumes have dropped 60%, you see this as a temporary detox. But for a small business that's getting by day to day, that's much bigger. You talked about Main Street. We want to finally focus on Main Street, not Wall Street. I think you were at a global investor conference in Beverly Hills yesterday. That's the cocktail party where you mentioned the crazy Ivan theory. And before that, you were at a JP Morgan Chase World Bank private investor summit. All those things are not Main Street, right? Main Street is an auto body repair, a specialty printer. So my concern is on the tariffs. Who pays tariffs, Mr. Secretary? No. Answer the questions I asked, please. I only have 5 minutes. Who pays tariffs?
Sorry, well.
Who pays tariffs?
Sorry.
Mr. Secretary, please.
Excuse me.
The question is very simply, who pays tariffs, Mr. Chairman? I'd like him to answer that question.
This guy came prepared with some questions.
Well,
He wants to answer other questions.
well, Congressman, if the exporters, dislike tariffs so much, why wouldn't they? If I think what you're trying
Bessent is deflecting. He knows that consumers at the end of the day have to bear the costs.
to get me to say.
Did you remember the
in
question? I'm not
US
sure you did. Who pays tariffs?
That it's a very complicated question.
Reclaiming my time. People pay tariffs, right? Reclaiming my time, Mr. Secretary. Reclaiming my time, Mr. Secretary. Reclaiming my time. You clearly aren't going to answer it. I'm not going to waste my time having you go, Mr. Secretary, reclaim.
I don't know who this guy is, but he got him, bro. He got him. This is one of the best cross examinations I've seen. He got him. And Bessent, he really doesn't have the best answer for this.
Mr. Chairman, I asked reclaiming my time.
Tariffs.
Mr. Chairman. And I asked to reclaim my time. Did I not? No, I said reclaiming my time because he's clearly not answering it. So, yeah, so as a small business owner, and unfortunately, I'd like that time back since you failed to recognize me for 30 seconds. So I just recently from one of my suppliers got the tariff surcharge on things. And in addition to the tariff surcharge, guess what else got raised? American-made walnut plaques. That has nothing to do with tariffs, but companies take advantage and do that. So right now, we are getting screwed right and left because of the indiscriminate use of tariffs. That's the reality for Main Street. And you go off to Beverly Hills for private investor conferences and talk about crazy Ivan theories. Answer that. What is the crazy Ivan theory of tariffs that you mentioned at the summit?
Well, first of all, sir, I've had meetings with more than 50 small lenders. So I want to clarify that. I would also say that in game theory, strategic uncertainty, of which you seem to like the name Crazy Ivan.
Well, it's your words, correct? Didn't you use Crazy Ivan at the?
Well, you've used it 5 times. And
that's the question, Mr. Chairman.
I am saying the strategic uncertainty is part of negotiations. That should we say,
okay,
here's what we'll accept. Please take this.
Okay, I've got your answer. Thank you. I'm going to reclaim my time again. So for a small business, we don't have that luxury, right? When the ports are empty in California and we can't get goods and people are stocking up for Christmas goods, Crazy Ivan is great for, please don't take this offense, really rich people like you. But for people like me, it's not, right? That's what makes small businesses fail. That's what makes people lose their jobs. That's what makes the stock market tank. So I'll ask one more time, who pays tariffs?
Sir, the history would show that it is a complicated mix of who pays the tariffs over various times.
So that's exactly the problem. If your answer, and you are a very educated person, you have a very impressive bio, cannot answer the question who pays tariffs because you won't answer that, and you say it's a complicated issue. It's not complicated. Consumers pay Trump's tariff tax. That's the reality. And I'll yield back, Mr. Chairman, but I do think next time if I ask to yield back, I would appreciate having my time yelled back.
Chair now recognizes the gentle lady from Iowa, Ms. Henson.
Thank you, Mr. Chairman. Good morning, Mr. Secretary. Thank you so much for taking the time to come and answer our questions. I appreciate what the Trump administration is doing to try to level the playing field for American consumers and restore our economy to where it needs to be. So I really appreciate the work that you were doing to make that happen, Mr. Secretary. And I certainly, as an appropriator, recognize the importance of making sure that every tax dollar is spent appropriately. And I appreciate your opening comments as such. So with that, the GAO estimates the federal government loses between $233 and $521 billion annually to fraud. Those are alarming numbers, hard-earned tax dollars just wasted. President Trump has certainly acknowledged the absurdity of this level of waste, and he signed Executive Order 14249 to protect America's bank account against waste, fraud, and abuse. And I was proud to support this effort by introducing a piece of legislation to codify that, the Protecting American Taxpayers from Wasteful Spending Act. One of the provisions of this EO is directed at your department, the Department of Treasury, to establish pre-certification and pre-award procedures across the federal government to prevent fraud and improper payments. So can you define for the committee today what an improper payment is and some examples of what you're seeing and why these procedures were not already in place before, Mr. Secretary?
Well, it's a bit mystifying why they weren't in place. And what we are seeing is that there was a very complacent upper level of management in many departments across the entire government. And what I can say at Treasury, that of the 1.5 billion payments we send out every year, they're required to have something called a TAS, a Treasury account symbol. We discovered that more than one third of those payments did not have a TAS number. So as the Appropriations Committee, you should be shocked by that, because how can a payment be tracked back to an appropriation? Only through the TAS number. So there was no accountability. So that is why the 450 organizations that sit above Treasury, where Treasury acts as the paymaster, are unable to pass an audit. So we have cracked down on that. Every payment now requires a TAS number. Very simple. And I will tell you that the mid-level employees who I have had come into Treasury to talk to me about that feel liberated. That they tell me, I've been here 20 years. I've always wanted to do this. I've been here 14 years. And they feel as though they now have agency and are making a difference towards saving the American taxpayer money.
So this is not only a complacency issue that you've fixed, but it's a morale issue for these employees who are helping to make the department much more efficient for taxpayers.
They're very energized by their participation.
It's certainly unbelievable when you think about that this was not in place, and certainly it's we've got lots of examples from the previous administration of some of those catastrophic failures. Who would you say is benefiting from those improper payments, and how could a government agency really justify standing idly by while those errors were seeping into our system and making our government less efficient?
I can't speak to who was benefiting, but I can just speak to the attitude that has been shaken up, that this is okay, this is not okay, and this is taxpayer money, and we are charged with protecting it.
What other plans are in place to help implement that executive order? You've talked about the Treasury account symbol. Are there other things in that executive order that you are executing on today?
Well, again, the president, as you mentioned, has passed. We are trying to go more paperless with the checks, with the very important checks that the citizens across the U.S. receive, whether it's Social Security, veterans benefits, tax refunds. There is a substantial number of those are stolen. So the president has issued an executive order to try to make that more electronic. That will protect the integrity of those payments, as well as cut down on costs.
Have you been able to claw back any improper payments for the taxpayer, reclaim those dollars?
Yes, we've called back tens of millions of dollars.
Tens of millions. Well, look forward to continuing to work with you to improve those efficiencies and execute on that executive order. Appreciate the work you're doing at Treasury, Mr. Secretary. Thank you.
Thank you.
I yield back.
Thank you, Ms. Henson. Chair now recognizes the gentle lady from Washington, Mrs. Klusenkamp Perez.
Thank you, Chair. And thank you, Secretary Bessent, for being here. So I ran an auto repair shop before coming here, and I know that people who are turning wrenches, who are filing an earned income tax credit or tax return, they're about 4 times more likely to be audited. And I'm wondering if you could talk to me about what the plan is for ensuring that regardless of what, income strata you're in, your probability of being audited is equitable.
Well, the Congresswoman, I think that was one of the problems with increasing the enforcement. There was nothing to say that there would have been more enforcement at any distributional level. So that what you were saying is that those receiving the earned income tax credit are more likely to be audited. That would have just been more auditing. There was also a proposal to track small payments, $600 on Venmo and things like that, which has been pushed back also.
But what is the forward program to ensure that there is an equitable, I have some quarrels with what you said, but what is the plan, the implementation plan to ensure moving forward, we are getting towards a more equitable enforcement rate?
Look, we are reviewing the processes for who is audited at the IRS. There's been a great deal of politicization of that. So we are trying to stop that. And we are also going to look at the distribution of who is audited and why they are audited.
Look forward to hearing more about how that is being implemented and how we can help you with that. So I think you and I agree that the current trading system has failed working people who are turning wrenches, driving trucks, changing diapers. Could you expand on how the proposed tariffs would ensure that there is upward pressure on wages?
Well, I think that there are many parts to that, but the key to upward pressure on wages is more job opportunities. And what we have seen since what the so-called China shock after China entered the WTO was a large decrease in manufacturing jobs. And studies have shown that workers in manufacturing jobs have more potential for large-scale wage increases than service workers do. So moving more workers from service work to manufacturing, they should do that. And the administration is also trying to bring down the costs for working families.
I agree, right? If you are trying to earn a living as a barber, you have to move to a city to earn a high wage. But if you're in a rural community where there's a factory job, you can own land, you can own your home. And I think one of your points about financial literacy is ensuring that we do have economic self-determination. You can buy the pair of boots that will last 5 years and not be in this pace. But there's a lot of work to do here, building real wealth and not the nominal kind of, I'm not really here to be a defender of the stock market. Most of the people I know don't trade stocks in my community. It's a question of being able to own land, having that capital access to start your own business, and frankly, some of the antitrust work to ensure there's a level playing field for small businesses like mine. I'm hearing from constituents.
So I've never heard of this lady, but she's a representative from Washington's 3rd District. So Marie Gluskemp Perez, but Washington's 3rd District is who she's representing.
Who
If was called on Christmas Eve, they'd probably get through because there were so many idle phones. If they called on April 14th, there was no surge to help them. So, as President Trump has repeatedly said, this is a common sense administration. So we're going to have common sense for the IRS. Playoff season is for the first from January 15th to April 15th. Game days April 15th, and we're going to make sure that it's better staffed then.
Thank you. I yield back.
Thank you very much. Chair now recognizes the gentleman from Texas, Mr. Cloud, for his 5 minutes of questions.
Thank you, Chairman, and thank you, Mr. Secretary, for being here. I think it was Albert Einstein who said that you can't solve problems with the same kind of thinking you used when you created them. And that's one of the things I certainly appreciate about you and the Trump administration and what you're bringing to the table. For a long time, we've seen the managed decline of America. And while many who run for positions that we hold will campaign on the need to do something, what we've seen is too often, and even because some of the politicking we've seen today, for the sake of politics, we've not been able to do the big hard things that we need to change course and get us out of the $36 trillion debt pathway and growing pathway that we're on, leading to that wall that you talked about. The American people have watched this all play out, realizing that their nation's been in decline, and seeing what they thought was kind of the promise that if we put the experts in charge, they would run the government, we would have a regulatory pattern that worked, the wealth gap would close, America would be strong, and that has not happened. What did the experts get wrong that you're correcting?
Well, sir, under President Trump's first administration, the wealth gap did close. That the bottom 50% of households by net worth saw their net worth increase substantially more than the top 10%. And we are aiming to do that again. That under President Trump's first term, hourly workers' wage gains were higher than supervisory workers. And look, what people got wrong was the shock. And there was this terrible policy of, it was essentially compensate the losers. And I do not think that the American workers are losers. They were simply cast aside as the necessary collateral damage in this unfettered free trade. And the free trade is not always fair trade. And we can see that from the large surpluses that these countries are accumulating on the other side. So we are aiming for fair trade to bring back high-paying precision manufacturing jobs to the U.S. And we are doing that. We're using tariffs, but we were also using the substantial deregulation, energy dominance. So we want to continue to make the U.S. an even more attractive location for manufacturing.
It's interesting you talk about manufacturing. I think it was in 2008, the intelligence community put out a report. I talk about it a lot because they said the greatest transition of wealth, power, and influence is happening right now. And this was some years ago. They said we expect it to continue. And it was going from the Western countries to the Eastern countries. And they said it was happening because we were sending manufacturing overseas and we were sending oil and gas revenues overseas. And yet they said it was like an unsolvable solution. Yet we have the Trump administration who's coming in and solving what seems to be not an easy solution, but a very clear solution in bringing manufacturing back and bringing oil and gas back. And appreciate it. I wanted to ask you, because there was a comment about the bond markets, and certainly that's really is a concern. We need to make sure that they stay strong and that the dollar stays strong. Are the bond markets more affected by the tariffs and the concern we see in them now? Are they more affected by the tariffs or out of control debt and the fact that Congress can't seem to get our fiscal house in order?
Well, I will tell you that the large stock of government debt is why I'm sitting here now, as opposed to back in the private sector. I became so alarmed by what was going on under the previous administration, this deficit that we had, highest ever, that when we weren't at war or weren't in a recession, and it's unsustainable. And I thought it was deeply cynical. And if we'd done it, if we'd continued it, then we would have gone into a malaise where we couldn't grow ourselves out. We would have probably been forced into looking more like a European style economy, very high government spending, lack of innovation, and lack of mobility.
And that would matter for us here at home, but certainly even for the world, because we've kind of been the innovation engine of the world.
All right, guys, we're going to end it out there. I'm going to be ending the stream a little early because I have something to do, which I will be telling you guys about in a second. But yeah, that's it for today. Bessent right here for you. Anyone wants to keep up with the stream, I'll put it right here in the chat. You can listen to him talk. overall, in terms of what he said, there's no real difference from what we've continued to hear over the past couple of weeks. The main thing he said at the beginning of the stream was that we have trade deals coming down the pipeline, and we have 17 out of 18 partners that are very willing to get ready with a deal. Again, I think the market trading at these multiples really needs a deal soon. And if we don't get a deal soon, there's going to be some issues. So they can keep saying it as much as they want, but eventually the market's going to be asking for a deal. And hopefully it comes within the next 2 weeks. But outside of that, I don't think we got anything else from Bessent that was that different from what we've been hearing over the past couple weeks. Okay, cool. So small announcement. I'm going to be on TV for the first time. First TV appearance on Bloomberg. I will be on at around 11:30. I believe it will be live right here. I'm putting the link in the chat, bloomberg.com/live/US. I think it should be there, and everyone should be able to see it. This will be a fun one. It'll be exciting. They wanted to get someone to talk about Palantir Q1 earnings. So I'll be live. I think it'll be like a 5-7 minute segment. Hopefully I don't cough in front of everyone on live TV. You know, I'm a little nervous for this, and it's weird because like in front of you guys, I'm like not nervous at all, ever. Like I go live every day and I'm like, I'm ready to go. But like on this, I'm actually kind of just like, it's so much more formal, and you know, there's all this production and stuff. So yeah, hopefully do well. And hopefully it's okay. And hopefully maybe we can pump the stock a little bit while we're on the air. So I think everyone should be able to see it from this website, bloomberg.live.us. This is the link right here. It's on Bloomberg Technology, which is their 11 a.m. Eastern hour-long program. I'm pretty sure it'll be streamed on this website. If it's not, then I'll get the clip of it and we'll watch it on the market close. But 11:30 Eastern. 11:30 Eastern. Are you doing it in front of the bricks? Yes. The bricks are officially making their way to Bloomberg. The bricks are making their way to Bloomberg. I'm actually really nervous, dude. Like I usually don't get nervous for this stuff, but I'm actually kind of nervous. So yeah, hopefully I make you guys proud and we do well. Some of you guys say make sure you talk slow. I am going to take that advice seriously, because usually when I get nervous, I talk fast. Even though I talk fast all the time, but when I get nervous, I talk extra fast. So that's the one thing I'm going to try to make sure is not crazy. It's just like, take your time, talk slow, breathe, and hopefully it's good. No, you don't have to wear a suit. I talked to the producer. You can wear whatever you want. They don't really care that much. So it's not that formal, but you know, it's on TV. So we're going to do it from the studio right here. It'll be fun. I didn't even tell my parents I'm doing this. So I'm going to have to text my mom after I get done. I was like, hey, Mom, I was on TV. So she's going to be so mad that I didn't tell her. But yeah, you guys know now before my mom. All right, cool. So excited for it. I'll be live in 30 minutes. It should be fun. It's retail's first appearance in terms of mainstream media. I don't think there's been any kind of retail Palantir bulls that have been on CNBC or Bloomberg or anything like that. So if this one goes well, hopefully we can make many more of these appearances over the long term and kind of embrace the other side of media, which is outside of the independent part, which is YouTube. Take a adventure, as Alex Karp would call it, over into the mainstream parts of the world. On top of that, I think the market close is going to start early today. So I believe the market close will be starting at 3 p.m. Eastern, 12 p.m. Pacific. The reason for that is because I want to do Technical Tuesday, but I also know that it's going to be impossible to do Technical Tuesday with AMD earnings, because none of you guys will allow us to talk about anything other than AMD when the AMD earnings is on. So I believe Jason will be on at 12 p.m. or 3 p.m. Eastern. We'll do TT for like 50 minutes from 3 to 3:50, and then we'll get into the earnings, and then we'll get into AMD's call at 5. So I'm looking out for all my AMD shareholders, because I know that the chat's going to be exploding when we try to talk about Amazon resistance and AMD's live. So we'll make sure to listen to AMD at 5 p.m. So yeah, TT should be starting at around 3 p.m. Jason confirmed, but I just have to get a final confirmation, but we should be starting the market close an hour early today. And then we'll keep going from there. All right, cool. That's it. Thank you, everybody. The link right there is in the chat. I am pretty sure that's the link that it'll be streamed live on. If not, I will get the clip and I'll share with everybody on Twitter in a few hours. First of all, I just want to say thank you to everybody for this opportunity. I would not be here unless it was for you. I was talking to the producer the other day, and she was like, yeah, you know, we watched a bunch of your YouTube videos, and you've got this, you know, community that keeps up every day and cares about the content. And it was funny because she was like, so who's part of your team? I was like, no, it's just me and thousands of other people for like 5 hours a day. And she was like, we have a team of 100 to produce 1 hour of TV. Like, it's so different. They have a team of 100 people to produce 1 hour of TV a day. And, you know, that's like fills the salaries of 100 different people that have jobs and families and kids, etc. And then with the new age media, it's just a camera, the chat, and then your ability to just, you know, be able to stream. So it's a totally different type of media, which is why everything is so proper and formal and produced on their side. But it's a type of media that I've never been exposed to, and it'll be cool to see it play out. So thank you, everybody, for being part of the community. I think it's a big win for all of us. It'll be a big win for Palantir. I would not want to be talking about any other company other than the company I've been analyzing for 5 years, even if the stock is down 15% today, because that earnings was phenomenal. And that's kind of the message that I'm going to be trying to explain on Bloomberg. So there it is. All right. Thank you, everybody. Again, link right there in the chat. I'll be back at probably 3 p.m. Eastern. And then we'll keep going from there for AMD, SMCI, Technical Tuesday, and the rest that we got on the market close. All right. Bye, everyone. I'll see you guys later today. Bye, everybody.